All right, guys, welcome back to another podcast produced by Mining Store. Today we've got myself, Tony, Mitch, and Taylor in the room. We've been away over in the US. We visited Consensus, which was really awesome. We're going to touch base on kind of the highlights of there and what the vibe was around the market whilst we're over there. So we've got a pretty stacked podcast. We got a bit about the stock market, generally what's going on in the economies. Going through some updates with Bitcoin, Ethereum, and anything else? What else are we going through?
We'll touch on Celsius and the debacle there that everyone's been seeing playing out. Taylor will touch on Polygon pumping in the last week with a really good deal in place there. And then, we'll just briefly touch on a lot of the technical indicators that we're seeing in both Ethereum and Bitcoin. So, should be good.
Love seeing a pump in a bear market.
It's always going to be a bit of fun, doesn't it? A little spice to the week of downtrend.
Always makes the Monday a bit more exciting.
Exactly.
Firstly, welcome back, lads.
Thank you.
Maybe that's why Bitcoin's pumping. Back in the office.
Brought the sunshine and glow.
Yes.
Yeah. All right. Well, we'll touch base on Consensus. It was the first one that we actually got to attend to, which was pretty awesome. So a lot of the speakers there brought a lot of intel. Sometimes get a little bit of inside word of what's going on, and just good to see. I think the first person we heard was Elon Musk brother.
Yeah.
A lot of old Muskie's brother. There was a lot of DAO talk, wasn't there?
Yeah,
that was probably one of the hottest topics. I probably wasn't expecting it so much, to be honest. A lot of my time spent in the mining and more trading and as such. But starting to become a really popular thing in the crypto markets, which is a good thing. It was interesting to see the advantages, disadvantages. I think Musk's brother didn't like at first not having control, which is no surprise. But he also spoke highly about when we have these DAOs, it's kind of a good thing. It's the best thing for these projects that people inside are actually getting more control and more say. So that was really good. What do you reckon the highlights for yourself were?
Some of them were really interesting to see. We concluded seeing CZ from Binance, which is always good to hear the great man have his cheeky little comments and talk about the market and what he believes in. We had the chance to go see the people from Link, from Phantom, them talk about updates to their projects, what's coming on, and they seem to be going all very strong throughout this bear market. And then, of course, like a major highlight for us was just not only these really good speakers, but being able to attend the trade show, which was pretty much half of it. Which allowed us to be able to talk to our contacts from places like Bitmain and stuff, and be updated on the new containers and the new miners that are coming to the market, and making really good contacts in those areas so we can provide the best products for you guys. So that was really handy going to the trade show as well.
Yeah, definitely. It was definitely good to speak with Bitmain. We actually got to see their Hydro product, which has been awesome. We made 2 relationships at Consensus as well, and we've landed a US hosting facility too. So everything kind of married up, and it's been good. It probably was about 3 or 4 weeks ago we were at Consensus. Since then, we actually, outside of Consensus, went up and saw the facilities, went and saw the manufacturing of the miners as well. It's been really good. We've actually got a product coming out probably at the end of this month for the Hydro miners. They're all hosted in the USA. We've got a 198 terahash miner, which is big step up from the last S19 Pro to 110 terahashes. Exactly. I did the calculations. They're more efficient on power as well. So I think every terahash is about 26 watts of power that the Hydros are using, whereas the S19 Pros was around about 30 or so watts of power, a bit more than 30 watts of power. So really good option going forward. We'll put more detail out in an email at the end of this month. They're due to go online at the end of the month, which will be good. We'll focus the rest of this podcast more on the markets and projects specifically.
That could be perfect time with the hash rate going down at the moment as well, because we're getting our hands on 198 terahash.
100%.
I've been saying it's probably going to do 0.32 in a year. It's probably going to go up a little bit more now.
Yeah, exactly right. Well, it's right now. I think I just did the calcs before. It's about 32%, as you said, of the Bitcoin. If this hash rate keeps coming down, we met quite a few of more commercial sized miners at Consensus, and some of them were, not necessarily shitting it, but they weren't exactly in high colours. So we will see more people turning off miners, especially when they've got massive facilities and huge power bills coming in, and that helps us as more retail miners. So
counting their satoshis.
Yeah,
pay the bills.
Exactly. I mean, if you can get closer to 35-40% of a Bitcoin, owning 2 of these miners is nearly getting you a full Bitcoin per year. So
exactly,
yeah.
We've got some good charts to share on the mining side as well a bit later in the podcast. So stay tuned for more kind of like mining updates. I was going to start the podcast probably speaking a bit about the stock market, the overall fundamentals in the market as well. The markets are rallying this morning, and some people may think that's a bit of a surprise. US inflation came out at a 40-year high last week. Now,
casually off the tongue, doesn't
oh
it?
god.
Interestingly though, the day before there was a fake news article that came out with US inflation at 10%, and the market actually reacted pretty negatively to that. So who knows why that fake news came out?
Yeah.
But the actual CPI came in under the fake news.
Buffett that came out saying it would be above 10%.
Yeah.
But interestingly, it came out at 9.1% under what the fake news came out as. So maybe the market saw that as positive.
They're just massaging people before they see the real numbers.
Potentially.
I mean, it still was a good point. It still was higher than expected.
Yeah.
So,
Exactly right.
So no real change in terms of the short-term outlook from the Fed. Still expecting a number of interest rate hikes over the next couple of months, which should be negative for the stock market. It should be negative for cryptos. However, there are a few indicators now that we are leading into a recession. US GDP shrunk Q1 by minus 1.6%. The GDP tracker in the US is forecasting minus 1.9% for this quarter. So that does put the US in a recession already. An official recession is 2 quarters of negative GDP growth, and the average recession lasts about 4 quarters. So potentially we're pushing halfway through a recession already. What that means is potentially along the way the Fed may need to pivot at some point. Some people may have seen online news about the US yield curve inversion. Essentially what that means is interest rates in the short term are forecasted to be higher than in the long term. So the bond market is signaling that interest rates are going to continue rising in the short term but decline over the longer term. So that's actually, to put a spin on it, it's kind of positive for the market because, short term there's going to be a bit more pain in the market, but long term they're expecting the Fed to kind of step in, save the day, and prevent like a crash landing.
They've always said the soft landing is going to be pretty key, so fingers crossed they actually deliver something.
Yeah.
It's a tough one because if you look at the last few recessions, inflation hasn't been this high before, so there could be still a bit more pain to be had there in terms of interest rates going a bit more aggressively in the short term, but long term as well, they are expecting rates to decline with a Fed pivot. So that's possibly why the market's actually reacting quite positively this morning, running higher. If you take a look at the Nasdaq, it's bounced on a 200-day moving average, trading above a falling wedge. So there is some early signs that a bounce of some degree is going to happen over the next couple of weeks. Whether it's a dead cat bounce or a full market bottom, that's up for discussion. Only time will tell there.
Yeah, I think the main point there is there's still uncertainty, there's still risk. It's not confirmed we're at a bottom yet. There's definitely more to come. It's just a matter of how much more. Hopefully not too much. Hopefully we start kind of evening out at the moment, and towards the end of the year we get a bit more hope in the markets, particularly in the crypto. Inflation's probably good for Bitcoin.
We won't go into too much detail about inflation as a hedge against Bitcoin because it's a bit of an argument for and against, but I will comment on it and say that once you dive deep into it, it's definitely a hedge against money supply, obviously, which is a huge aspect of inflation. And if you're looking at core inflation, real inflation, it's actually a hedge against actual inflation, but as opposed to just people generalizing that it's just a hedge against inflation. If you look over the last 6 months, clearly if you're just looking at Bitcoin as a hedge, it's not.
Sure.
It's gone down 60 to 70% whilst...
I saw a funny meme on that. It was I bought a Bitcoin at 60k to hedge against inflation. I'm down 60%, and inflation's up 10%.
But yeah, it's something I can release an article on or something soon. But yeah, people will get often confused about just very heavily generalising that it's a hedge against inflation when it's not. It's a hedge against aspects of inflation and actual inflation, but to say it's a hedge against inflation isn't quite the right wording. But yeah, just touching on the stock market stuff and these interest rate hikes and inflation, I think it's I've reiterated it in a few of our updates, and yeah, there could be further bloodshed to come, but you need to kind of, with all these stock market crashes, you hear signs that, this is the worst the stock market's been since 1930, this is the worst inflation and interest rates has been since the 70s, all these things, and you just got to kind of take a step back, and in terms of cryptocurrency, look at it as, a year or two ago we were at 20k BTC, you fast forwarded 2 years, you're still at 20k, but you've had a pandemic, an impending global recession, an impending war, major hyperinflation across multiple countries, and we're still at 20k. Like, you've got to take it for what it is and kind of take a step back. And yeah, we're down 60% for the year, but I'm sure if you asked 3 or 4 years ago what will the price of Bitcoin be if it experiences a war, a pandemic, inflation, raising interest rates, I'm sure most people would say it would be at zero. So
yeah, I think overall, no one can deny that it's still a risky asset. I mean, something doesn't fall from 60,000 to 20,000 if it isn't a risky asset. But as you said, it kind of just solidifies that there's so much infrastructure, it's come so far, there's so much more regulation to come. People are more confident. There's big institutions investing into it now. So yeah, overall, it's in a good position.
It just comes back to that dollar cost averaging strategy as well. So just take more of a long term approach. Don't try and catch a falling knife and jump in at the where you think the bottom is. Just dollar cost averaging into certain projects that have that long term potential.
Yeah, and I will just touch on that for members. It's actually why we've only got a DCA strategy currently in place for ETH and BTC, because you want to be positioning majority of your portfolio in the two strongest assets, and definitely you'd say the two safest. I can't see ETH and BTC ever going to zero, but I'm sure some people would have told you Luna would never go to zero a couple of months ago too. So it's why you want to, in these downtrends, really position yourself in those two assets and accumulate as much of them at lower prices as you can. And it's then when they start to bounce and rebound when you can really decide to take profits on those and invest them in alts, or begin to be confident enough to invest in some major alts that will bounce on that bounce back. So
yeah, definitely.
We'll definitely across this week go into a bit more detail about our strategies with some of our more major alts at these levels. But as we kind of remain overall still a bit more bearish on the market, given these macroeconomic trends and in the different financial markets that we're telling you, considering there could be a bit more of the bottom to go, we're kind of just waiting on that for now.
Yeah, that's the safe play. And what we're watching for from a technical side of things is how the dollar index is really going to perform. So I'm going to put a chart up on the DXY shortly. We can see it's tagged a major resistance trend line. So we are expecting a short-term pullback on the dollar index over the next week or so. The dollar index has been just a risk-on, risk-off play. So when the dollar index rallies higher, all risk assets have been moving to the downside. So if we do get some downside coming onto the US dollar, that's going to kind of start filtering through into other risk assets, which should enjoy a bit of a positive run. And that's what's been happening this morning in cryptos on other risk assets like the S&P 500 and NASDAQ as well. So, technically speaking, we're not too sure if the top of the dollar index is in just yet. It's at a key resistance level, expecting a short-term pullback, which should filter through to other risk assets as well. So, that comes despite the CPI at sort of 9.1% as well. So, keep an eye on the dollar index. We've touched on the NASDAQ as well, down 34%. Breaking out of a falling wedge formation. So, early signs that a bounce is coming, but the dollar index is really the kind of go-to or market leading indicator anyway.
Yeah. It's a good two summary points to watch. Like, a lot of people are asking, when's crypto going to take off again? When's the stock market going to rally again? If you just look at the interest rate hikes, wait for them to stop, look at the DXY, wait for the DXY to start coming down, that's probably going to be your best indication that we're going into less risk territory, and the high risk assets will start having their run after that.
Yeah.
it's got to be a difficult time as an investor as well, because like obviously if you're down 60%, being patient is a kick in the shins. So it's the harshest advice is to sit back and watch, but it's the soundest strategy that obviously we've had over the past few years.
Yeah. And it also works on the flip side. Like once you make these investments and you have the patience until the bottom's hit and you've got some buys in place, all you have to do there is sit back and watch as well.
100%.
See the rewards come. It allows you not to hesitate during a bull run because you've already made the effort to invest in the hard times, and then you reap the rewards on the other side of it, which there will be, which everyone kind of needs to drill into their minds. I think, I'm not going to make any predictions, but I think out of this recession, depression, whatever it becomes, you'll probably see one of the biggest bounces that we've ever had, I reckon. So
for sure. I think, like as a miner, that's actually something really comforting in these times. It's probably something that's very overlooked by the market because we're used to having direction. But when we don't have direction and Bitcoin's just bouncing between 20, 30 or even lower and just sitting at those kind of low levels, all that time as a miner, you're actually accumulating Bitcoin. You're not just sitting there holding one Bitcoin that's worth $20,000 and you look at it in 6 to 8 months' time and it's still just worth $20,000. If things just keep going sideways, you're actually accumulating and you're picking up more and more as we go. So, definitely a good way to diversify the portfolio, get something that's yielding and make sure you're picking up along the way.
But it takes away the emotional side of it, and as an investor or a trader, they say it's 10% technical, 10% fundamental, 80% controlling your emotions, and sitting in your hands doing nothing at times as well. So, but yeah, I guess that's the general financial markets. If we go on to more crypto-related topics, there's a lot happening. On Celsius.
Yeah.
What's everyone's thoughts
there? I'm sure most of our Discord members, or particularly the ones involved, I wrote a Celsius story, I think, on Friday. Just detailing their journey kind of into oblivion and how they over-leveraged themselves in a hot market and kind of got themselves into this mess, which we've also kind of seen with other DeFi protocols such as Voyager Digital, 3 Arrows Capital. There's a balance sheet there kind of detailing that they owe $4.7 billion to users in liabilities. So I suspect for those watching... there's still a fair bit to play out here. They've filed for Chapter 11 bankruptcy in the New York court, and I suspect now there'll be some form of scheme or reorganisation plan for that company to kind of come out and try and help users get back their money, just as Voyager Digital were doing. But it'll have to be a watch this space. I think there's still a fair bit to play out. Adds on to what you were saying before, like look at what the crypto market has experienced. We've experienced the war, massive recession in economies, and plus all the black swan events that we didn't bring up. Like Terra UST, 3 Arrows Capital, Celsius. I mean, there's a list of a fair few, kind of 5 or 6 that have happened over the space of 3 months, and these things usually don't happen kind of at all. The worst black swan events we used to get were probably hacks of exchanges and stuff, which were bad. But we didn't see any top 5 projects, top 10 projects rugging the entire market. So
derailing.
And I mean, if you dive deep enough, that as a black swan event not only was it just a top 10 project, but if you dive deeper, it's why Celsius were in trouble. It's why 3 Arrows Capital were in trouble. It's because all these DeFi protocols over-position themselves on Luna, because if you're getting 18% returns, well, why not?
Exactly right.
If you've got billions of dollars, it's a lot of revenue, and they all banked too much on Do Kwon delivering, and now we got ourselves into this mess. But just before we move on to the technical.
UST did 500% the other day.
Oh yeah. There's some.
I have no idea how it did.
Just some other general fundamental points that we usually throw in there. The main ones really here are Putin signed a law into banning domestic payments of digital assets such as Bitcoin. There's who the bloody hell knows what goes on in Russia because they seemingly change their legislation once a week and there's new reports. But it'll be a bit of a wait. And also we mentioned this one a couple of times, like once a month or so, and this statistic gets revealed. But one of the biggest Bitcoin whale addresses has bought another 1,500 odd BTC this month, so it almost holds 133,000, so almost worth $3 billion. I think that's actually more than what Michael Saylor owns. I think he owns around 125,000 BTC or so. Or maybe it's 140,000 odd now, something around there. But looks like this guy's matching it with Sailor. And a good point to make is, obviously this guy has the capital to do so, but if you track this wallet, he pretty much just accumulates every month, because I'm sure in his mind he's not accumulating to sell in November 2022, he's accumulating to sell in November 2030. So I guess
I think like that, coupled with a chart that's a bit further down on the amount of Bitcoin holders with more than 0.01 Bitcoin in their wallets, that's a really positive sign. That people are more educated, people who see the long-term advantage in holding Bitcoin, whether they're small holders or bigger holders. You've got the bigger holders acquiring more and more and more, and you've got a larger number of people adopting Bitcoin and willing to gain exposure to it as well. So really, good positives there. What else is there in this?
Well, the Fear and Greed Index has spent 72 days in extreme fear, the longest period ever. I think it's easy to probably recognise why that's so. I remember showing you guys, the 8 weekly red candles that we had in a row. That was a new historical record. I suppose this one is as well. So, I mean, that's self-explanatory. We've now been in a downtrend since November 2021. So,
just on the Fear and Greed Index, that alone plotted against the price of Bitcoin just tells you everything you need to know about when to buy and when to sell.
Yeah,
it really does.
Extreme fear, that's the time to accumulate, and although it's painful and you're probably worried emotionally, but that's the time when you should be looking to buy Bitcoin and offload during the extreme greed scenario as well. So we'll post that chart as well in a second, but looking at it from a long-term perspective, it's clear today when you want to be buying Bitcoin.
Yeah,
exactly right.
I think that should be it. Central African Republic is now will be holding Bitcoin as a reserve asset, which is good for a further area of nations that are probably going to be making Bitcoin legal tender. So hopefully we can see a few more countries adopt that kind of thing in the next couple of years and stuff, as it keeps growing and growing, the technology and the adoption. So last thing I will say is that very bottom point. That's a huge statistic that at the bottom of the last bear market there was 2 billion in stables. Right now there's roughly 150 billion, so there's a lot of people ready to launch and ready to buy, which is the main thing. So once this thing does pivot, once everything lines up, it's going to be a hell of a run.
It's
once
a lot
people start putting money in. So
75 times more.
That one about the UK Treasury is quite an interesting one. So the UK Treasury has had a number of high-level meetings with Binance, Coinbase, and other kind of crypto exchanges. So that's quite an interesting one. Another country or economy looking to potentially get into the crypto space as well, especially like a high level.
They were quite bullish a few months back, weren't they, about trying to implement stables and whatnot, wasn't it?
I mean, with stables, there's been some conflicting stories. Look at the US.
Not exactly stable, but
so although the market has been melting down, there's a number of promising fundamentals coming out in the crypto space.
I can talk about just some wider news. We've seen ETH rally pretty hard recently. They did make an official date, in inverted commas, that it'll be September 19th, the date of the merge, after some successful test nets have been successful. So maybe people are pricing that in now. There's some people that think a flippening is going to happen. I don't know about that. But I can expect for those ETH maxis and those people that do hold ETH, which I suspect is the majority of people listening, is there's pretty good things on the horizon. And I tell you what, if we get to October, November, a couple of months after the merge has happened, and there's a fair bit of hype around it, if the market starts to turn, the sky's the limit for Ethereum. So you should remain excited about that. And then, just touching on elsewhere, I've just put some general about some of the more major alts we hold. They're all up, between 3 and 7% today, and for the week, off the back of some pretty positive reaction to wider fundamentals. So that's good. And then Taylor, just want to touch on Matic.
So it's had a pretty interesting sort of week and a half, I guess. It's the first crypto to ever get introduced into Disney's accelerator program.
Massive.
So it's really positive for it long term, in the sense that it's obviously got a bigger network, more sounding board off a bigger platform. Going to get more exposure. So I think over the last week it's jumped up 46%, which pretty decent pump in the conditions we're in now. Where that's going to leave it, who knows in the future. I think its major support, I think, is around $1 now, and it's sort of trading around 0.8. So pretty positive.
Trading at 80 cents at the moment. It was down 90% from its all-time high. So I mean that's rallied from about 30 cents up to 80. So a huge jump there really over the past week.
Yeah, and I think the plan for it in the sense of what it'll get out of this program is sort of more range in NFTs, augmented reality and stuff like that. So it'll be a sort of new frontier in the sense of what they're trying to do on a more corporate structure. So we'll see how we go.
Definitely. Yeah, it's good to see, these projects. Like the worst thing about, some kind of bear market is when you see a lot of really solid projects start to fall off or taper off. They haven't got the war chest to continue development and paying for, the level of service that they used to provide. So projects like Matic and Polkadot, Atom, these are all projects that we love to support and love to see them going well.
Yeah, and I think the long-term perspective for these should be good in the sense of how many dApps they've picked up from Luna as well. So that's sort of promising, as well as it being an ETH layer 2, if ETH pumps, vice versa. Hopefully some potential in the long term, maybe.
No, exactly right. The boys are playing around with a few charts here. What have we got?
I'll just touch on the technical stuff. For those members, you'll probably get this in written form. So
I like this one.
If you don't want to listen to this stuff, you'll probably get it sent to you in a couple of hours. But I'll quickly touch on some technical stuff. So firstly, we've shown you guys the Pi cycle bottom in the last few kind of updates we've sent out. I just want to, so it's pretty much just, the opposite of the Pi cycle top, if you've seen that. So it's just a bearish relationship between the 471 SMA and the 150 MA, and then it's multiplied by a factor of 0.745. The reason why we show you this this indicator is because they've used it historically in both the 2015 and 2018 bear markets, where BTC bottomed out at $152 in 2015, and then bottomed out at 3,122 in 2018. And pretty much this indicator, if you can see here and here, pretty much predicted the bottom before it went on these huge runs upwards. So the flashing signal is here where they cross. You can see it here and here where it lined up, here and here where it lined up, and we've actually made that cross in the last week. So if I just get up a couple of other images that show this, from the original, this, no, okay, not Beauty and the Geek. There we go. So again, figured out this Pi cycle low. You see, it's been a pretty good indicator of what happens afterwards. Bang, 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 bang. And then you see we're on that same trend line here that it passes through, and we've just flashed a signal there. So there could be a bit more playing around here, maybe some sideways action for a while, maybe a little dip, but afterwards it seems
it looks like it's just at just a major crossroads. Either it's going to
have, I just want to
collapse now.
As well. I've showed you guys a few of these historical indicators in some of the updates, and like something I just want to reiterate is these historical trends are really good, and they sometimes seem a bit too good to be true, which I understand, and I think that's more so the case right now. Is I've said 100 times, you can't look at these in the same context as 2015 and 2018, because in those periods there was a lot of quantitative easing, the market conditions were still very favourable, there was a lot more volatility as well. It's really hard to look at this in the context of a global recession, rising interest rates, rising inflation, a war, and a pandemic. Just labelling those as very different conditions. So we can still look at them, but I think it's more take it with a grain of salt. The last thing you want to do is blindly seeing this flashing signal going, I'm all in now, let's flash to the Pi cycle bottom at 20k, and then you've gone all in, and 2 months later we're at 13k, and you're wondering, why has this happened? I followed the historical indicator. There's a lot more to go for these to play out, but nevertheless they're really good to conceptualise, and we'll continue to be sending any of these through, these flashing historical signals.
That 13k area that you mentioned, that is in line with an 85% correction on Bitcoin, which does historically happen in the bear market. So although we're at 20k now, touched at 17k, I think 13k is more in line with a an average Bitcoin bear market.
Yeah, prior to going over the States, which is probably about 5 weeks ago, I was kind of looking and going, I think it's definitely possible we could kind of touch that 13 to 17k area. When we were actually at consensus on the last day, it did touch around the 17.5, maybe 18 area. Now I feel like the kind of, now that we understand a little bit more and we've seen the proof in the pudding and it's not just speculation with what the states are doing with interest rate rises, I do think we're kind of closer and closer to that bottom. Like, I'd be surprised personally, and it's just an estimation or a guesstimation, that I'd be surprised if we did hit that kind of 13k area, unless something kind of dramatic happened in the economies. It's possible, but we'll see what happens.
Well, that's why a lot of people didn't get out near the top of 60, 70k because they thought it was going to 100. A lot of people are going to miss out on the bottom because they think it's going to 13k. So you never know exactly where it's going to go. It always kind of catches you by surprise, doesn't it, Rube?
So just some more. You guys have seen this one a fair few times now. Tony doesn't like it, but I don't mind it. It's a Bollinger Bands indicator, so you can see by that price squeeze. There was also a squeeze. Oh, you can't see my mouse on the screen, but there was a squeeze up at the 38k level, a squeeze down at the 28 to 30k level, and there's now another squeeze happening. One thing I will note is on average these usually play out for 2 weeks, but there can obviously be outliers where the move can come 3 to 4 weeks once the squeeze occurs. I personally anticipated that this volatile move would come after the CPI data released last week, but seemingly that was pretty priced in. There was a pretty harsh sell-off, but it wasn't volatile in nature that pushed it down. But we'll still look at this. It could happen in 3-4 weeks, who knows? But it's just continuing to coil up in that squeeze and ready for the next volatile move. So we'll have to wait and see. I did show last week a look at the MACD on the Bitcoin chart. Forecasting. There we go. No more Netflix. Sorry about that. These bullish crosses that happen. I showed these. There's one here. You can see the MACD. Oh, my mouse isn't there, but there it is. You can see these crosses down here. This is what's called a bullish cross, and then you can see the green candles afterwards in MACD, and then you can see what obviously happens to the price. It goes up, it's a bit of a stagnate, then the bullish cross happens again, boom, come down here, bullish cross, rise in MACD, boom. And these usually also fall in line with inflation, RSI movements as well. So if you look down here on the 2-day, we've started to develop a couple of closing green candles and that bullish cross play out. So, historically, when we've had a couple of these happen and it continues to trend upwards, we've seen pretty bullish movements in price. So what I do want to just touch on in that is, is that looking at things on different time frames can sometimes give a better perspective. So in the short term, sorry about the Netflix once again, if you look at actually the MACD on a 4-hour time frame rather than a 2-day time frame, we can actually see where the bearish crosses happen as well. You can see the bearish cross happen here. We saw huge negativity in MACD. You see the price. We've gone up. We've now had another bearish cross on a shorter time frame. We've closed 2 red 4 hours. So it remains to be seen, but we'll have to keep a close eye on that. We'll keep you guys updated in the short term. Okay, what do we have next? I think we'll just quickly revisit that bear flag we've been talking to you guys. Talk about hash ribbons quickly. That's just continuing to show capitulation in miners. We won't touch too much on that, but you guys should have had a good read on my write-up about what that indicates. Once that flashes the buy signal, we'll be letting you guys know, but that continues to show capitulation, so we'll leave that for now. Where are these bear flags? They're up here. Here they are. Open original. So just that bear flag continues to play out on Bitcoin. Once again, sorry. The main thing I want you guys to look at here is we're still playing that out in that zone pretty much perfectly, like the prior one. The thing I do want to kind of point out is that 200 WMA weighted moving average line that I spoke about a few updates ago. Here it is on a full scale. So you can see that for 8 to 9 years, it doesn't go back on this chart long enough, that pretty much acted as just like the most solid point of support for Bitcoin. You see it touch here in 2019. You see it touch here later, and it retests that support in Thingo. And then, yeah, it's pretty much the first time in 9 years we've broken that 200 weighted moving average line. And now it's actually flipped that to resistance.
Yeah, exactly.
So if I show you that bear flag again, once again, you'll literally see it acting as like the perfect resistance. Like, you can't see it on this because the graphs are big, but we've wicked up and touched it like a couple of times, maybe on a different time frame. I didn't show it on 4 hours, but pretty much to invalidate this bear flag and to see any further bullish movements, like we're going to have to break through that 200-week moving average, weighted moving average, and flip that to support once again. I think that's the main thing that we want to see which, by the way, like roughly around here, it's about 22,500, I'll say. So that's the price you want to see broken through if we're really to go against the market and present a really bullish run. But I'd say that's literally the most important thing in terms of support and resistance right now. But yeah, just keep a look on that, because there seems to be like a lot of euphoric bullishness in this recent rallies. Everyone kind of gets caught up. You know, we're at 19k, we're at 21k now. Like, it must be the bottom. It must be the bottom. Like, if you're charting yourself, like the number one thing you guys want to look out for is volume. When you see a huge push in Bitcoin's price, go look at the volume as your first point of contact. And like, there's not a heap of volume, then it's a fake out 9 out of 10 times.
It doesn't take much for it to come back down.
It hits the top level of that resistance where it can push up with many green candles and not a whole lot of volume, but there's so many sell orders waiting at 22k, 22,500. It takes 2 days to get up there, and it takes half an hour to come back down. So, that's just something to keep mindful of. And just the last thing we'll show on Bitcoin is literally what I just spoke about, but I'll just show you on a graph. So you can see that 200. See that wick up to, it's literally perfect. It's
touches it
all the way up there. As soon as everyone saw the weighted moving average had flipped to resistance,
Bang.
They sold it, and people probably shorted all the way from there all the way down to 19,500 type of deal. That key level of resistance there's 2 levels of resistance, I'd say. There's that one around 21,700, let's call it, where you can see like a lot of wicks tested it here, almost today, perfectly wicked up to that resistance again, came back down. There's just a lot of sell orders. You can see here, it's wicked perfectly there.
That's right on the 21,700 price, is it? Yep.
Yeah. So that's pretty much the first level of resistance, and we've got this ascending diagonal here that's acting as a level of support. So I would expect that if you want to see this play out, if we saw a bearish reversal and we came back down here, you'd want to see it bounce off this diagonal again and whatnot. And then there's also this lower level of horizontal support. You can see a huge amount of wicks kind of testing that high 18,000 and low 1900 level and bouncing immediately off. So that should be your points of kind of, if you are trading support and resistance, maybe take a look at this chart. You've got the 200 week weighted moving average here, and so that should be it for Bitcoin. We'll take a quick look at Ethereum for you guys as well. I believe there's only 2 charts to kind of show you. We initially showed you this, you guys, this ascending triangle probably about, when was it? July 7th. So we showed you that 11 days ago with those horizontal highs, horizontal lows. We did expect, if anything bullish was to play out with Ethereum, this would probably be the case. I'll show you guys how that chart looks now. And this is how the chart appears now. So it's pretty much followed it to a T. There was a breakout of the triangle a bit lower, but sorry, I'm just getting the notes up here. So we've pretty much played out the ascending triangle, and it's trading above that massive level of horizontal resistance. If you see here, we did have a fake out actually below the ascending triangle that tested that key level of horizontal resistance just above, pretty much at $1,000. You can see that wick down there, and it just got eaten up and then straight back into into the triangle. So that's pretty good, and it's pretty much the first bullish signal we've almost had in Ethereum in what feels like months now. I remember a few months ago it was trading at $3,000. It feels like in a flash. We've just slowly watched it burn and burn down to this $1,000 level. So, I think this is really good because we haven't had something like this. Like, you can see how underbought it was, and we've trended up really nicely in RSI. We've trended up really nicely in MACD, and we finally got a huge breakout candle there. So it's really good to kind of see this happening with the news of the merge upcoming.
Yep.
Maybe this is a signal that people are now starting to really, really accumulate ETH really hard.
Gain that confidence.
Yeah, in anticipation for that, because, as you guys know, like, it's pretty much just followed Bitcoin for months now. And on the harsher side, when Bitcoin's probably gone up, like, Ethereum hasn't responded just as well because of the Bitcoin dominance. But to see today that Ethereum has easily outperformed Bitcoin is a really good thing, I think, for Ethereum, because it hasn't done that in a long time. And mind you, it usually does at the start of bull markets. And throughout bull markets, it does outperform Bitcoin in terms of returns. So it's really good. So if we look at this thing, what we want to see is that actual first fib level comes in at around $1,700. If this was like to really, really play out in a really good bullish movement, like, you would expect it, we'd test that level. But I do just want to show that, now that we have kind of gone past that huge level of resistance, this is what the chart will look like now. And kind of where that level of resistance sits. We sent you guys this chart in multiple updates, and I think we probably sent it to you at this point, and we expected it to, hit that level of resistance, come back down. It literally did that, exactly that, went back up. So what we'd probably like to see here to confirm an even more bullish rally is actually a retest. I think since I printed this chart, Ethereum's gone up another $50, so maybe it doesn't require one. But if we do retest this level of what was once resistance and bounce from it and flip it to support, it'll actually be a really, really good thing in the short to medium term for Ethereum. We might not see those really scary low levels that a lot of people are calling for, and I've seen 300 thrown around, 600 thrown around, these type of things. So who knows, with the upcoming merge, maybe people won't let it get to those levels. Maybe if we see another 50% correction in Bitcoin, I think you might probably see a pretty harsh correction in Ethereum as well. But
if you think about it logically, really, at the moment or over the past couple of weeks, it's been extreme fear. So you can kind of guarantee that the overall market has been shorting or selling Ethereum and Bitcoin, other cryptocurrencies. So at the minimum, we're probably going to get a short squeeze higher, a short squeeze rally, where the market rallies higher, takes out all of the short sellers in the market and puts them under pressure. So counter trend, short squeeze, whatever you want to call it, we should be setting up for a small bounce higher from here.
And I would just say, if we do kind of reach oversold territory in RSI, we haven't yet. Maybe on the live chart we have, now that we've gone up even more. That's probably when you can expect the retest to come. So if you're in the short-term market, if you go on the Ethereum chart and you see RSI and oversold, just be cautious, and don't be too afraid if it starts coming back down, because it could be a retest of this horizontal level, which you can expect is around, I think, about 1280, 1270. That's where that horizontal support, now support, kind of sits. But if we do kind of hold this level, it is very bullish. But if we do break below this level of support as well, just be very careful, because it could contribute very heavily to move really, really badly to the downside. So that's it today, just technically on Ethereum and Bitcoin. We've covered off most stuff. I'll be sending out an update for both of these to our members, but I'm glad everyone's got a chance to listen to the podcast again. Anyone want to add anything else?
No, pretty much just, I think it's just a really important reminder that this is, it can become more draining in a bear market to stay in tune with the markets and, really understand what's going on and keep up to date with all the news. But really, in the long run, this is where you want to be paying the most attention. I know when we first kicked off the Trading Academy and we had some of our earliest buys in Bitcoin and Ethereum in 2018, the profits that we made came from those earlier entries, and it's times like now where we put those entries in. So definitely don't want to be turning a blind eye and just think because things aren't flying up that you can have a rest or not pay attention to the markets. it's really important to stay in tune now. We've got our DCA strategies out on our majors, Bitcoin and Ethereum. They've played out, and if you remember...
just on Ethereum should be fully played out now. So our last buy for Ethereum, I'll have to double check, I believe it was at $800. Or $850, which we scalped, which is really good.
Really good.
Just bounced, almost double that price now, so up on that buy. But and then our last buy for Bitcoin was at 17,000 or 17,500. I'll have to double check. Sorry, but which we haven't quite. Sorry, it was at 17,000, but we wicked down to 17,500, so we just missed that one.
So still in the market to grab that one up.
So still in the market to grab that. That's very, that's in the case that I believe there's heavy support around 16,200 to 16,500. So if we do test there, or go anywhere near that level to test that level of support, we've at least grabbed a buy at 17k, without having to be glued to the screens because we've got our buy orders in. But just on that, as I said at the start of the podcast, any changes or any further buys of Bitcoin and Ethereum in the case that we even see further lower levels than that, we'll obviously let you guys know. And
may readjust, may pick up one if
we may pick up
lower.
more because as Tony mentioned earlier, we haven't seen the full 80% historical retracement. Might not happen this year. There could be a bear market next year that happens in. And then there's also from the lower levels of support in earlier 2018, 2019 of kind of around 9 to 10k or so. So if those get hit, we could be getting some buys out. We're starting
to look at the altcoins. Not ready yet to put those positions in,
we're
for members,
out exactly how we want to do that, and we want to be just very cautious because, as I've said numerous times, you kind of don't want to bet against macroeconomics, but you also don't want to be too rushed with all of this because I reckon mid-year this year, well not mid-year, in the early months of this year, when we weren't kind of factoring into account these impacts of these fundamentals on the market, we probably rushed into too many altcoin buys and DCAs. When it probably would have, obviously we couldn't predict the future, like no one could predict a war, hyperinflation and a recession, or else everyone would have been talking about it then, but they weren't. But we just want to be kind of take a more cautious approach for you guys and maximise those gains. But in any case, we'll be updating you guys on that in the coming week, definitely.
Yep, for sure. Our email will go out at end of the month for the miners for the hydro option. We've got a very limited amount. I think we've only probably got 50 or so allocations for that. So get in touch with that. And outside of that, that's pretty much a wrap for today.
Yeah. If anyone's got any questions, or if anyone wants us to talk about anything in particular, reach out to any one of us on Discord or an email. As Will said, it's for you guys.
Yep.
So if you want something, reach out.
Absolutely.
For sure.
That's all right. Good stuff, guys. Cheers.
Thanks for listening.